First-time home buyers, let's talk down payment assistance. In this video, we're going to talk about who offers it, what some general criteria are for qualifications, and how you can determine if you yourself qualify. So let's talk about who offers it. Now, generally, most states have their own program that they administer, but you're not actually getting the loan from the state itself or the down payment money from the state itself. Generally speaking, the state has approved certain lenders to offer their program, and you're getting a first mortgage with that lender that is approved through the state. You're also then getting the down payment assistance money through that lender as well. So you're not calling up one lender or bank to get a loan and then calling up the state and going through a separate process to get the down payment money. Again, generally speaking, we're talking about across the entire United States here, and different areas have different rules, but generally speaking, you're going through a state's approved lender and getting everything done, one-stop shop, making it way easier for you. On the screen here, I'm going to put just a partial list of some of the programs that we are approved to offer. This isn't even a full list. As you can see, there's a lot of different programs that are going to be available out there for you. Now, there's also going to be generally some local programs. So certain towns will have programs. Towns in certain areas will offer some programs. Certain counties in certain areas will offer some program. Most of the time, you're going to go to your lender for the state program and you're going to tack on those smaller local ones. The smaller local ones work a little different. Generally speaking, you're getting your mortgage through the lender and you are, in fact, getting those local grants separately and applying separately through the towns. Now, your loan officer is going to be able to show you how that all works. Here's a site. It's a pretty cool site. Write down the URL. This site does a pretty good job. It catches 60 to 70% of the programs that are available out there. But your best bet, honestly, is to just pick up the phone and give me a call. I'm licensed nationally. I am happy to go over what is available in your specific market. We'd be able to walk you through that kind of stuff. So you call me, I'm licensed everywhere. Anyway, the programs are typically available through the state, but you're working with approved lenders like us. That's who's offering these monies out there for you home buyers. Now let's switch over for a minute to qualification, or what the criteria is to qualify. Most programs do require you to be a first-time home buyer. Now, not all programs do require you to be a first-time home buyer. So don't think just because you've bought a house before that you can't qualify. Almost every one of them, by the way, defines a first-time home buyer as somebody who has not owned a home in the last 3 years. So if you sold a home 5 years ago, 10 years ago, 20 years ago, even though it's not your first time buying, you may still qualify as a first-time home buyer in most programs. Some programs don't even require that. You could have sold a house last month and still get some down payment assistance from these programs, even not as a first-time home buyer. Again, more rare, but it does exist. Now, most of these programs, again, not all, but most of these programs also have income limits of some sort, meaning you can't make over a certain amount of income to qualify. Now, some people who are making pretty decent incomes think, I'm not even going to bother checking into these programs because I make too much money. Well, you'd be wrong in a lot of cases. There are some pretty liberal income limits out there. So, for instance, Pennsylvania has a program where it doesn't matter where you are in the state, you can make up to almost $200,000 and still qualify for down payment assistance, which is crazy. And also, by the way, it's area specific in a lot of other states. So let's head on over to Connecticut, for instance. In Hartford County, the limit's somewhere around $137,000 that you can make. But as you go down to Fairfield, which is close to New York City, a lot of people who work in New York City will live in Fairfield County, Connecticut. There are higher incomes there, higher cost of living. That higher income area has higher limits, almost $200,000 in that area. So even if you're making some money, even in the six-figure earnings area, you may still qualify for these down payment assistance programs. And the same is true nationally. The higher priced areas are going to have higher income limits. The point is, don't think that you're making too much for these programs, because you might not be. And for people who are making less, there's generally levels of assistance that are going to be available. So making less money, you might get a slightly better deal than somebody making more money. But in general, you're still getting some money out there. You got to check these things out no matter what your income level is. Let's see if you qualify. Now, let's talk about rates for a second. These programs generally have lower rates than the market. Most of them are right around market, maybe a little bit lower, but some will give large discounts. For instance, one state had a program, it was temporary, but they had a program where if you had $15,000 in student loans, you got over 1% off on your rate. That was huge. You've got others that are at certain income levels, giving you rates that are 1% to 1.5% lower than market. So rates, generally speaking, not across the board, but generally speaking, on most of these down payment assistance programs are better than market. So even if you don't need down payment assistance, you do want the best rate. And sometimes these programs not only are going to give you some money, but also going to be able to give you the best rate that's out there. And remember, these programs are put out by the states in most cases to promote home ownership. Think of it this way. The state program is not going to allow for most risky features in loans. So for instance, these almost across the board are all fixed rates. You're not going to see stuff that's adjustable. You're generally not going to see things with balloon payments. You're generally not going to see things with negative amortization. Those are considered risky features of loans, and these loans are meant to be as consumer friendly as possible. So awesome loans out there with great terms as well. So what can the money be used for? Well, there's the obvious ones, down payment and closing costs. Again, different programs have different guidelines. You got to talk to myself or another loan officer to get the scoop locally. This is generally speaking, but most of the time, down payment and closing costs, you can apply funds to. But we can also get creative a lot of times with these funds. We can use them oftentimes to buy down interest rates, get you cheaper payments, maybe buy you out of paying any mortgage insurance. Some of the programs actually by default don't come with mortgage insurance, even though you're putting down 20%. And in some other circumstances, we use it to consolidate debt. That's right, consolidate debt. Let's say you're thinking, I don't need down payment assistance. I've got $30,000 here. I'm going to use that as a down payment, my closing costs. Everything's going to be wrapped up into this $30,000 for this $400,000 house that I'm purchasing. All right, great. Well, you come to me for down payment assistance like somebody did 2 or 3 weeks ago, and they had about a $30,000 car loan that they were paying on. That was about $800 and something per month that they paid at a 9% interest rate. All right, big payment for somebody and not a great interest rate. What did we do? They were going to spend $30,000 to buy the house. I actually had them use their own money to pay off their car, so they had no balance on that car. And then I got them $30,000 from the program they qualified for to replace their $30,000 for their down payment and their closing costs. They got in there now with no car payment, saving over $800 per month. Other people will do the same with multiple credit cards or anything like that. Now, in those instances, you can't take the money from the down payment assistance and directly put it towards that. But if you've got your own money you were intending on spending yourself, we can reapportion your own funds to do those payoffs, consolidate that debt, or pay off that debt, and then use the money from the programs for your down payment and your closing costs. You're able to get into the house, and from a debt perspective, just be in a much better situation. So let's talk about, do you have to pay this money back? And the answer to that is about 50-50. About half the programs are what we would consider forgivable down payment assistance. Now, there's some, very few, that immediately are forgiven. Just right off the bat, you buy the house, boom, it's gone. You don't owe anything on that money. Most of the forgivable programs are over time. So you've got, say, given $50,000. That $50,000 might be forgiven over a 10-year period. Well, over a 10-year period, every year, 1/10 is forgiven. So $5,000 the first year, $10,000 the second year, $25,000 by year 5, so $30,000 by year 6, right? If you sold the house within that 10 years, whatever's left gets paid off from the proceeds of your sale and pays off the down payment assistance that's still left. That's considered forgivable. Usually the forgivable is going to be in a 0% interest rate and you're making no payments. The balance of that is just going away over time. Again, a lot of different programs. You got to talk to your loan officers specifically about what the program you qualify for offers, but generally speaking, that's how forgivable is done over a period of time. Some are given at a 0% interest rate with no payment. So there's one program in Massachusetts, for instance, called Workforce Advantage that currently, this could change any day, I suppose now, currently it's a 0% interest rate with no payments on that $30,000 that you're getting from that program. So the way that works is, again, you're getting your $30,000, you're using it towards your down payment. You are not required to make any payment on that money. The balance does not grow. And when you sell your house, you can then pay them back. So they're really just letting you park that money on your house. And when you sell your house, you just give it back to them from the proceeds of your sale. And then lastly, there's monthly repayable. This is a lot of them. Around half will have repayable on a monthly basis. I know I said half in the other one, and then I said a third, the second one, and then I said half again. The math isn't mathing, but that's okay. That middle one doesn't come up all that often. So about half the time, though, you are having payable down payment assistance. Now, let's say you're getting $40,000 there's usually an interest rate involved plus a term involved. So Connecticut, for instance, has one where you'll pay it back at a 5% interest rate over 30 years. Massachusetts has one where you're going to pay it back at a 2% interest rate over 15 years. And again, as you're talking to your loan officer, as they're quoting you your monthly payments and your monthly obligation to buy a house, they should be including this in there so you're eyes wide open, knowing exactly where your payments and your monies are going to. And lastly, let's figure out what you qualify for. In the description, there's going to be 3 ways in which you can do that. Number 1 being you can set up a 5-minute call with me if you'd like. There's a link right to my personal calendar. Go for it. We'll pick up the phone together. We'll get on, ask you a couple questions, and then let you know, hey, here's what you're likely going to qualify for. And then if you want to see if you officially qualify, we'll take the next steps. Another way to do it, there's a link to my mortgage application there, rate.com/Brad Salerno. You hop on the phone and we're going to go over what you're going to qualify for. Lastly, you're always welcome to call or text me. My number is listed there as well. When it comes to down payment assistance, Brad, the mortgage guy, and the Salerno team have got you covered. Like, follow, and share to spread the word.